Now, when I'm looking at any chart, the last candle in that there is a green candle which has formed like this. Okay. And then there was a big red candle before that. So I will think that the stock is bullish because it has shown a green candle, right? A big green candle. Now, please think that on the right side, we always have the latest candle, not on the left side. It does not go from left to right. It goes it does not go from right to left. It goes from left to right, which means the chart moves on towards the right. So the latest day, let's say today the market, 23rd of August, this is today's candle. And then there will be no candle. Tomorrow's candle will appear after tomorrow ends. On a real-time basis, you can also see the candle changing its shape. I mean, just like you see your food being made when you're eating street food, you see your food being made, right? So the candle keeps turning and changing its shape as the day moves ahead. Finally, when the day closes at 3:30, then the daily candle will be finished. So on 23rd August, the latest candle was this. So if I look at one candle, or if I look at two candles in conjuncture with each other, or if I look at the last three candles, let's say, and the shape is unique. For example, there is a candlestick pattern like this. This is called morning star or evening star. Okay. So this is called a morning star. This is called an evening star. So if you are looking at one candle or two candle or three candlestick as a pattern, that's called Japanese candlestick pattern. Okay. Now you know what is single, double, and multiple. So the more number of candlestick patterns, and you are always looking at latest candles, candlestick pattern, the Japanese candlestick patterns, okay? Then the more number of candles you have, that will tell you how to analyze the stock next day. This is one thing, okay? Now, what do you need? The next thing in technical analysis, what else do you need to know? So there are these Western candlestick patterns. Western patterns, it are not candlestick patterns, okay? Western patterns are basically chart patterns. Charting patterns. What does it mean? So basically, whether you are following a candlestick chart or a line chart or a bar chart or a Heikin-Ashi chart or any chart you are following, if let's say this is how the candles were moving. I mean, here it is, these are all candles, let's say. So you have to look at 1 year or 6 months, or let's say a longer view you have to take, an ultra wide view you have to take. You're not looking at just the last three candles, okay? That's Japanese candlestick pattern. No, not looking at that. You are looking at the shape which is formed in the entire chart of 1 year, 6 months, or something like that. Now, if you closely look at this is called a head and shoulder stock. What has happened is that the stock was in uptrend. I don't know how many of you have seen an uptrend ka line here. This is how the stock was in uptrend. So this was support, resistance, support, resistance, support. What happened here? What do you call this? What do you call this? I had told you. Breakdown, and another name, reverse breakout. Right? This is breakdown which has happened. Right? Now I think things are getting connected. It's not breakout, it's breakdown. Breakout happens when it goes up, above. So when an uptrend is broken like this, you will see that the stock will see a support here. This is actually called the neckline. Okay? And it will take it will go up like this. Now, generally the peak of this will be same as the peak of this, and then it will again go down and test the neckline next time. This was first support, then again first support, and then the same support has been tested. And from there, if it goes down, then you can, at this point, you can sell the stock or short the stock. Short means you're not having it, but you can short sell it so that you can buy it when the stock goes down. Till the time the left shoulder, the head, and the right shoulder is formed, you cannot short. You will only short here. You will not short here. You will not short here. You will not short here, because you never know, the uptrend can continue also, na? Or you never know, the uptrend can continue like this. You won't do that, okay? Let the right shoulder end, then only you will short the stock. Called head and shoulder stop. Top means it's a top reversal. So uptrend is now going to reverse, and it is now going to become a downtrend. If you can see, it's a downtrend which has started. Can you all spot the downtrend now? Yes. So this is what the patterns mean. So basically, Patterns can look like a flag. Patterns can look like a stock is like moving like this. This is called a symmetrical triangle. Okay, a flag pattern. So you can have a stock doing like this, like this. You must have heard about what is this pattern? It's not double bottom. Okay, this is cup and handle pattern. It's called a cup and handle. If you see, it's like a cup and handle pattern. So a lot of patterns happen. Charting patterns, they are called. You don't need to have candlestick for this. You can see this in line chart also. And that's why I've not written the word candlestick in this. Candlestick is important for Japanese candlestick patterns. These are pattern of the candle. And these is pattern of the chart. So it can be using line chart also, candlestick chart also, and any chart it can work. Any chart it can work. Okay, all right. You can short any stock on intraday basis, but not for delivery. How can you give delivery if you don't have the stock? When you sell a stock, which means you short it, you have to give the delivery to someone. If you don't have anyone to whom you can give the delivery, if you don't have the stock to, then what will you give the delivery of? So you can short the stock in futures. If the stock is available in derivatives market, future and options, then you can short the stock there. That option is always there. You can short it there. Okay, all right. So either you can short it for intraday, so you can sell it in the morning or anytime during the day and cover it before 3:30. You can buy it back before 3:30. Or you can short it in the futures and then buy it later on. You have 1 month, 2 months, 3 months ka futures. So you have to go for future and option, derivative market. Another study in technical analysis is of the technical indicators. Now, what are technical indicators? Let's kind of understand. Let's try and find out. So, technical indicators are actually formulas which you put on the price data. So basically, if I have a price data, OHLC price data, let's say, on it, I put an averaging formula, or I put a square root formula or squaring formula. I do something with this. I find the difference between high and low of last 14 days. If I apply a formula on price data, OHLC price data, that is called a technical indicator. So there are two types of technical indicators, lagging and leading. Leading technical indicators and lagging technical indicators. Okay. Also, there are two other types of technical indicators, by the way. One is called an overlay, another is called an oscillator. An overlay or an oscillator. When we do technical indicators, I'll explain all of this. Okay. Is there any other area, sir, which we need to take care of? Yes, you have to. So there is something which is called the Elliott wave theory. So the Elliott wave theory says that the market always is into some particular wave, which is a 8-wave sequence. 8-wave sequence means market at any point of time is either in these 8 waves. So if you closely look at it, the waves which I have drawn as like 8 waves, 1, 2, 3, 4, 5, 6, 7, 8, and then a new wave has again started. So this is basically till here. So Elliott wave theory, people have done so much of research on Elliott wave, and I'm telling you, there are universities in US which are named after Elliott, and they teach Elliott waves to their students for 2 to 3 years, and then they make advanced software and they try and predict the waves of the market. Just like there is a software which predicts the 3rd wave, 4th wave of COVID, similarly, these Elliott wave theories exist. Elliott wave says that market is an 8-wave structure. Similarly, there is another theory in the market which really works, and even now people believe in that, and that's called the Dow Jones theory or the Dow theory. Okay, the Dow theory is completely theoretical. Okay, but whatever I have taught you till now, like long-term trend, short-term trend, uptrend, downtrend, and all the assumptions of technical analysis which I have taught you, everything which I have told you is actually nothing but Dow theory. You can consider that I've already done Dow theory. There's nothing else in Dow. Dow was considered as a father of technical analysis. He was the person who invented the concept of trend, support, resistance. Everything which we know in technical analysis today is Dow theory. Sir, is there anything else? Yes, there is something else, which is called price action strategy. Okay, that also you should be learning. You should know what is price action strategy. Okay, there's a system where you only look at some boring and exciting candles and you create a price action. Price action strategy means you will not look at any of these, nothing. You will only look at price action strategy. Price action strategy means none of the technical parameters work except price action. Pure play price action. Okay. Also, as I said, that there is a study in technical analysis which is called demand and supply zones, which is called zone analysis. Okay, this is a study, demand and supply zones. That's also one of the area of technical analysis. All of these colorful areas, so good they are, looking at, like, right? These are all the different areas of one single word which you all know, which is technical analysis. But remember, you have to study all of these eventually in life to call yourself a real technical trader, okay, a real technician. You can't ignore any of these. All the areas are important.